we said, of course, the cost objects consume what? Activities. Okay, so we know our cost objects already. Cost objects means our products. Okay, we know our products or we know our services already. So the first thing we do is we have to identify the activities that are undergone in order to produce those products. We have to identify the activities that are undergone in order to produce our burger and our lemonade. And we have seen one of the activities, which is what? The heating or the burning or the frying, which is used, but which is, of course, how to call it, consuming electricity. Okay, so what is the activity in terms of our lemonade and our burger example? The activity that we have seen is what? The how to call it, the heating or the burning or the frying or whatever you call it. Okay, so first you have to identify the activities. Then two, you have to collect the cost of each activity into what is called a cost pool. Okay, equivalent to a cost center under traditional costing. So a cost pool is the same as cost center, but ABC method calls it what? Cost pool. Okay, cost center means how to call it, a department or an area, you know, where costs can be how to call it, traced together. Okay, so we collect the cost of each activity into a cost pool. So the third step is to identify the factors which determine the size of those costs. Okay, and those are called cost drivers. Okay, take note of this, cost drivers. These are terminologies that you're going to use in ABC. Okay, so first you have to know your, the third step, you have to know your cost drivers. And what are your cost drivers? Your cost drivers are factors which determines the size of the cost. Okay, let's use some typical examples before we reach the slides. Let's say for us, the lecturers at the UTG, okay, like part-time lecturers. If UTG wants to apportion their overheads, okay, in terms of us part-time lecturers, what will be the cost driver for us? What will be the cost driver? First, what is the activity? Let's determine the activity. What activity? For lecturers, like the cost, let's say UTG wants to apportion the overhead cost of, you know, how to call it, lecturing into maybe their various courses. You understand what I mean? Okay, so what are the activities? Or maybe just mention one activity. What would be lecturing? Lecturing is the activity. Very easy. Lecturing is the activity. So the second step is we gather all the costs. Okay, let's say all the we can gather all the costs. For example, if it is BPA, SBPA, MA3 lecturer, what's the cost? How to call it, economics lecturer, what's the cost? That lecturer, what's the cost? So you put them together. That's what the step 2 is talking about. The step 3 is labor hours. Cost driver. You determine the size of the cost. So let's say the activity is, please, once I'm on, please just allow me to land before you ask anything or you interject, please. Right. So number 3. First, number 1, we agree that the activity is what? Lecturing. Okay? So we put together all the lecturing costs. And then number 3, we have to determine the cost driver or the factor which determines the size of the cost. The cost in this case will be a lecturing activity. And what will be the factor that will determine the size of the cost? Can someone help?
The lecture hours.
The lecture hours. Exactly. The lecture hours. Okay, so the lecture hours. In case it's, you know, they want to look at it at high level, it could be the number of lecturers as well. Okay, so but in our own case, since we are paid according to the lecture hours, well, they don't consider that much actually, but that's the way it should be. You know, so lecture hours. Very good. So the third thing is to assign the cost of activities to products according to the product's demand for those activities. So in order to do that, we find our cost driver rate. So in stage 3, after determining our cost driver, we find our cost driver rate. And our cost driver rate is the same as our FOAR or OAR. And then number 4, assigning the cost of activity to product is the same as apportioning it. You know, when we're doing traditional absorption costing, after finding our OAR, what do we do? We apportion. So we use the OAR and multiply by the actual activity level so that we can get the absorbed cost, isn't it? So it's the same thing here. Number 3 will be like determining your cost driver. Okay, the cost driver here will be equivalent to our activity level when we are doing our traditional costing. Okay, so cost driver rate will be the same as our OAR or our FOAR. Okay, and then we assign. So this is exactly what we do. Okay, so these are some of the activities and their respective cost drivers. For example, when you want to do ordering, when there's an activity called ordering, is the number of orders. Okay, the material handling, the number of production runs, lecturing, the number of hours of lecture. Let's say, how to call it, the doctors, for example, the cost, the salary attached to the doctors. What will be the cost driver for that one? What will be the cost driver?
The number of patient cares.
Number of patients they are able to attend. Not to cure them, but they don't care, but they attend to the patients. So the number of outpatients that they are able to attend to. When you go to private clinics, a typical example is Sarah. Okay, when you meet a doctor, you know, each doctor has got its rate. Okay, its rate. So how to call it? If Sarah wants to calculate their cost and they want to apportion it, they will definitely look at the number of patients that each doctor, was able to attend to. Okay? So there are lots and lots of cost drivers depending on the nature of the business.
Sorry, Mr. Fofa.
Yes. So let's go ahead. Sorry, yeah.
Yes, can one call the cost driver as cost per unit?
Cost per unit? No, the cost per unit. The cost per unit will be the cost driver rate. Okay, so the cost driver will be the unit you are talking about, the unit of measure. Exactly, the unit of measure. Okay, so it will be the unit of measure. So let's look at this exercise just to, someone works at GTSC at the board. So what can be some of the cost drivers that can be applied to your transport company? Okay, Mariama Haidara. Mariama works at Ajib. Okay, Mariama works at Ajib. Mariama, what are some of the cost drivers that a bank can have? Like if you want to apportion your overheads, your various products.
Number of customers.
The number of customers. The number of customers you are able to see. The number of customers each teller was able to see. Okay? Another cost driver could be the number of accounts that have been opened. Okay? So someone also works, that's Mamat works at GTSC. Mamat, what are some of the cost drivers that GTSC can use when it wants to when it wants to oppose on the how to call it the overheads to their various products? Your own products will be the bosses, isn't it? Let's say you have your admin cost. You know, you want to find, you know, how profitable each bus is or so. So what are some of the cost drivers that you can use? Mamat? Is Mamat with us? Okay. So let's go to Fadera. Fadera, you work at GRA. You work at GRA, isn't it? So what are some of the cost drivers that GRA can use when it wants to share its overheads? One of them could be number of taxpayers, isn't it? Number of taxpayers. Okay, Ndela, so you also work at GTSC. And tell us, what are some of the cost drivers that GTSC can use? Number of buses, you want to say, or number of customers, okay? It depends on what they want to oppose on. Okay, Amadou Jane works at AA & Co. That's a chartered accounting firm. In an accounting firm, if you want to oppose on your overheads, let's say, so what are some of the overheads? Some of the overheads that you may incur, maybe what? Electricity, you know, rent, and so on and so forth. If you're going to oppose on that, you know, to each of your service area, what cost driver are you going to use? Amadou? Okay, somebody works at FAO.
Yes, sir.
Who is talking now?
Hello.
Yes. Yes, Amadou.
Hello.
Yes, Amadou, I'm hearing you.
Hello. Oh my goodness. Hello.
Yes, we are hearing you loud and clear, Amadou. Okay, fine. I think let's proceed. I just want us to understand this concept. Ibrahima Toure works at GPA. Ibrahima, what are some of the cost drivers that you can use?
Yes, sir. Mr. Fuba, I think it's supposed to be number of vessels.
Okay, so first you have to determine the activity. Okay, let's say the shipping activity. Of course, the shipping activity, it will be what? The number of vessels. Okay.
Yes, movement.
Yes, let's say if it is relating to freight, it could be the number of containers, isn't it?
Yes.
Excellent. Okay. Yes. Somebody works at Sintubalia Upper Basic, so that is a school, number of students, you know, like that. Okay. So excellent. I just want us to, and there's an agent. I don't know, is he a land agent? Bubaketa, are you a land agent or what agent? AFIN money transfer. Senabu Dumbuya. Senabu, money transfer company. What are some of the activities that you can use, and what will be the cost drivers?
Is the number of customers or transfers.
Number of customers or number of transfers. I like that. Number of transfers is very, very, very important. Okay? The number of transfers the customers make. Okay? So let's say, you know, you want to oppose, and you can definitely use this number of transfers. Okay. So that people understand this concept, the cost driver concepts, and how it can be applied in real life. Okay, so let's move. Right, so what are some of the benefits? Of course, we've been talking about them. With ABC, you can have a more accurate product costing and pricing decision. Definitely, we've seen it. Okay? In the case with the burger and the lemonade. Another benefit, it is flexible, to analyze cost by activities, providing more useful costing data for management decision. Okay? I hope we know we are doing management accounting to help managers or directors to take decision. That's one of our functions. Very, very, very important. In fact, this is our main function. Okay? As management accountants, we provide data, we provide information. What do? We advise managers, we advise directors how to go about with the business. So management accountants are really, really important. So it depends on the field or the area you work in. So the third is it provides what? Reliable indication of long-run variable product cost. It helps to understand the nature of the cost. Of course, it provides a more logical base for costing of overheads. Of course, it has some limitations. Sometimes you can look at the cost-benefit analysis. If you have to get an expert to come and implement or to come and develop an ABC method for you, you have to look at cost-benefit. The benefit attached to it, is it worthwhile to spend that much? So in some cases, it will definitely be worthwhile, but in other cases, it won't be. Okay, so those are some of the limitations. Information that you deal with, of course, is historic and internally generated. That's a limitation. Of course, sometimes it's very difficult to apply in practice, but not many people apply ABC in practice. Most people apply absorption costing. But it's really, really important. We've seen the benefits. And of course, it focuses on allocation of cost rather than cost control. Okay, so let's start our question. We have a long question, which is a past ACCA question, which has got some absorption costing in it and ADC on it. So let's start it.
Sorry, Mr. Fovana, just a quick question before you start.
Yes.
You just read that it is easier in minimizing costs. Then does it mean that it is more profitable than the absorption costing?
Yeah, well, more profitable in the sense that it will enable managers to take a better decision by using ABC. It will enable managers to take better decisions than when you use absorption costing, because we've seen the example, in the case of the lemonade and the burger, isn't it? Okay, when you use ABC, you will use a technique that will fairly share the overhead cost between various products. So in that case, you will not overprice some products, neither will you underprice some of them. Okay, so of course, by using ABC, it's more profitable. Of course, it can show a better profitability analysis than that of the traditional costing technique. Okay?
Okay, thank you, sir.
Right.
Sorry, Mr. Fofana.
Yes.
Yes, like it is related to the last lecture. I just want some clarification.
Yes, go ahead, Omar.
Like in the absorption costing, the cost is normally absorbed.
Okay.
Yes, but for the marginal costing, the overhead is normally treated as period cost.
Exactly.
Yes, I just want to understand what the period cost mean.
Period cost meaning, what it means is, for example, if you are trying to do your costing for different months, so it will be like, this is for January, this is for February. If you are trying to analyze using years, this is for 1999, this is for 1998, and so on and so forth. So what it does is it relates to a particular period. So it does not consider, it's not product sensitive or service sensitive. That's what it means. Okay. Okay. If there are no more questions, I think we can go and answer our question. So please make sure you have your handout. This is it's already part of the pack I sent. The how to call it, the handouts that I sent earlier on. Okay, so please refer to this question, and we can work it together. Okay. So 1 second, I'll be with you. Okay, so we're going to open a new spreadsheet, a new Google Sheet. Okay, so for those of you who are not here last class, just pay attention to this, or for those of you who don't understand how to start a new worksheet, so I'm going to start a new worksheet afresh. Okay, so I'll go to my account. Before doing this, let me just stop, please, so that the video is not too long, because if it is too long, it becomes a problem. So let me stop this recording and start a new one. 1 second.